Okay, it's going to be this week's Market Skyline for episode number 272 of the Trading Justice podcast. Matt, myself, this is Coach T, Coach Matt here. And Matt, let's analyze the market. The S&P 500 is breaking out. That's the chart you have in front of you right now. Going into the summer months, on strength like this, is that something that you trust? You trade? What's your take on the ES?
Tim, we looked at this last week and we were just looking at the high base situation right here from last week. And we're saying, okay, you can't do it unless it gets up above those levels. Obviously, it tested, came down, tested, came down, tested. And then finally today we get some price action. It breaks out. This is why confirmation is so important. Watching that go up above that key level of resistance, that should run from here. And what I really like about this, Tim, and the beautiful thing about technical analysis is you don't care about politics or news or media or anything, right? It's just price action. You can focus just purely on the price action. And what I like about this is it's breaking out here. It certainly has overhead resistance levels back here as it did in February and March, right there at that 2790 by 2800 level, as we've discussed in recent weeks. But if you look at the RSI, and the RSI is the relative strength indicator, a cross up, back up above 50, moving back up under 70, this tells me that it has a lot of room to run. It doesn't guarantee that it will in any capacity, but it tells me it has legs. And so on a breakout such as this, with the legs that it has on the indicators moving up, especially with RSI, I fully expect the market to continue to appreciate back up into those previous levels of resistance. Now, the key here is close, right? That's the close. We're currently looking at the market trading during the actual market trading day. So we haven't seen it close yet up above those levels. So if you look at this 15-minute chart, you're seeing this breakout on the overnight numbers. You're seeing it kind of appreciate there. It's got to close above this breakout level. And a lot of people put that closes. It's got to be at least 1/2 ATR above that level. If you take the 1/2 ATR rule, you're looking at somewhere around 14 points above 27. You're talking somewhere around 2750. So, Tim, I would technically give that a confirmation closed above 2750. It is currently 2746. But definitely positive sign.
There's been a lot of news out there internationally. Obviously, the stuff going on in Italy, easing political tensions. Looks like they're not going to necessarily have as much trouble as they did. So the market reacted positively towards that. In the jobs report on Friday, which showed strength in the U.S. economy, the big one we're going to be working towards, though, Matt, is that June rate hike from the Federal Reserve here, middle of the month. They've got another meeting coming up. But I love what you said, though. I mean, instead of getting all caught up in politics and this and that, just trade what you see. And the market is definitely showing strength right here. And good breakout, looking for confirmation. I like
Bears
that.
Are running.
Yeah, that's right. All right, let's move on to the volatility index. And always, it's a quick look every day. But I do look at volatility each and every day. It gives me an idea of what's going on with the options market. The VIX is fading down here and showing some weakness. Options are cheap. Summertime, it's going to stay down here in the tank until the market shows some weakness, and we don't have any of that right now. Let's move on to crude oil. Not much to see on the VIX there, but crude oil, lots to see here, Matt. How do you interpret this big sell-off?
I'm very concerned now. Last week, I thought it was a slight overreaction. My analysis was let it slow down, let it play out. I don't think you should have run and jumped on the bandwagon on one big green candle going back up here. Let it smooth down, let it slow down. One day up is not that. We want to see some degree of consistency on that. But I was bullish on this up until you look at our trend line here, our trend line connecting the dots, support to support to support. Even on Friday here, coming back down, it just smack dab right into that support level. You now have a crossword down moving average here. The last time we saw that moving average come down like this was back into this range. Price did eventually appreciate back up, but saw another move back down. So I'm thinking this is definitely in bearish territory for me, Tim. I'm definitely not a buyer, and if you're definitely not a buyer, you could definitely be a seller. But that's not how I personally approach crude most of the time. And so I'm gonna kind of sit in the sideline here, let it slow down, let it pick a direction. If you own crude, which many people own crude, either USO, CL, different ways to own it. Obviously, when we saw the volatility shift from a week and a half ago, that would have been a time to make sure those are covered. Buy back those options, ladies and gentlemen. Reissue. Buy back them. Reissue. Keep cash flowing on them. Don't. What I would suggest to the long-term investors is don't freak out at this. Cover it. Collar it if you need. But definitely, oil is an appreciating inflationary product. But for the short-term traders, this is a stay away from me from the buy side.
Definitely a very cautious set of candlesticks. There's no doubt about it, Matt. Red candlesticks that are expanding on volume and pressure, real weakness here. There's no doubt. I thought 66 had a good shot of holding, and we are definitely going below
Tim,
that. Yeah.
66 is a very, very important number. I mean, you look at this overhead resistance level, should have acted as a new support level. It was right in that trend line. If you're a buyer, right, and you're looking for a reason to buy, adding the simple moving average, the 200 period simple moving average, you're looking for reasons to buy is basically what you're doing.
Mm-hmm.
And if you just add that to your chart, you might say, well, oh man, it can come all the way down here. And yeah, it can. It certainly can. And that might be the next target for it, Tim, is for it to come down to its 200-day moving average. And then for, the long-term investors and the traders to take a look at it at that point. But it does seem to me that they're going to flood the market with some increased in production out of Russia and Saudi Arabia. It doesn't seem like the Iran, the U.S. moving out of the Iran deal had that big of an impact, from a demand perspective. Saudi Arabia, Russia make an agreement to, fix that liquidity problem, and you saw what transpires. These things, if oil certainly can come back all the way down here. To me, if you're a buyer, there's nothing to see here until we see a better setup. For the investor, I think it's right cover calls, offset, hedge, waiting to see a better setup.
The seasonal expectation going into the summer, we already kind of had that bump, and now this pressure, definitely one to keep an eye on, no question about it. Let's go into gold and take a look at the other major commodity that we like to track. Silver's shown some relative strength over gold recently, but this is a bear retracement, pivot point, old kiss goodbye pattern in the making. That when charts fall underneath those moving averages, do you see the weakness, and do we think it's going to come down into that 1250 range? What's your take?
Oh, this was our analysis last week, that the trend line was going to hold, that you were going to see a bear retracement coming back into resistance. I think the projection on gold from this point has to be coming back down. I wouldn't put it, at 70-80% probability, but I would put it somewhere between 55 and 65% probability of it coming back down into these old support zones right here. We were looking at it from a potential average yield perspective last week, and their projection was somewhere between 1240 and 1260. And Tim, I don't see any reason to come off that technically, but the one thing I do want to say to that is that $1,300 level has been a psychological level. And very similar to oil coming back down into a support level and then obviously breaking it and coming back down. This came back up into his resistance level, kind of consolidate a little bit right into this range right here. If it can get up above 13, it might show some teeth. There's no doubt about that. But at the end of the day, we trust our eyes and we trust the technicals, and trends, patterns, support, resistance, all moving down, momentum to the downside. I expect it to get down into this 1240, 1260 range, but I would not be surprised in any capacity if it fights for 1300.
Any conversation of commodities is underpinned with analysis from the US dollar because of their inverse relationship. Let's take a look at the USD. And the index is on a little pullback. Matt, it was a parabolic run to the upside, showing so much strength. Now we've pulled back, found near the moving average, not quite came back to that 20-day moving average, but a nice candlestick here today. Dollar seems to be strengthening, and with rising interest rates and the relative safety that international investors view the U.S. economy compared to others, it makes sense now. The narrative has somewhat changed with the dollar, but now we're going to start rallying into some of these key old resistance zones. As a chart is developing like that, Matt, how much does that play into your thinking, that stuff back in October and September and December of last year?
it certainly does play a role. I mean, it certainly does. We see these we as the traders, we see these overhead resistance zones, and we have to target something, Tim. You
Mhm.
know, I mean, traders do, whether it's an old resistance here, or whether it's an old support here, or whether you're averaging these two price movements up here. Everybody's targeting somewhere based on some technique. And so, in terms of, the previous levels of resistance, it hits resistance over here, smacks it right down on the number right here, comes right back down. But here's what I like about the dollar right now. You're showing a lot of strength in trend. It's showing its consistency in trend. It is slowing down a little bit in comparison to this price movement over this price movement. So there is a little bit of slowing momentum. But here's the
Mhm.
kicker. Whereas gold came back up into resistance, oil got absolutely beat up. So as the dollar came down just a tiny bit, really only one day, Tim, gold came back up into its resistance levels. If we expect those commodities to come back down in price, and oil shows a lot of weakness as it's broken its trend line, the dollar didn't show any type of real weakness outside of one day. One down day, three straight nothing days shows slowing momentum. I see relative strength still going into the dollar in comparison to the commodities because of this, and that gives me a positive two bias on the dollar. Now, obviously, the Fed could have something to say about that.
Sure.
They're the
But
variable.
it feels somewhat priced in at this point about the Fed rate hike. I think
It does.
traders are all expecting a rate hike in June. So probably the only thing that could really happen is language or interpretation in the statement. Who knows? I do know this, that everybody's going to be watching the Federal Reserve meeting, because we always do, Matt. Even if it's a little fanfare, you have to pay attention to that. That's coming up
You
here
know
in.
what I like about the current Fed, though, Tim, and I hate saying that, they have been consistent. They've been consistent in their policy statements. They've been consistent when they said they're going to raise rates. Jerome Powell has not minced words with there. He's been more hawkish than his predecessors in Yellen or in Bernanke. Obviously, Bernanke. So I think we can take them at their word for right now, and that's like with most traders, you and I, we expect that rate hike to come. Language, that's going to be interesting. That's going to be the variable.
Yeah, the tone that I get from Jerome Powell is people respect what he's saying and they believe him.
Yeah.
And we didn't always believe Janet Yellen. It's not that we disbelieved it, but we knew that they were soft. And
Oh, I disbelieved some. So I,
well,
I certainly thought she was lying at some points, but I haven't gotten that from Jerome Powell. I haven't gotten him. And when somebody new comes into a position like the Fed chairperson, which is so vitally important to so many different things, commodities, currencies, economics, you name it,
mm,
housing market, you name it, it's certain, but man, I don't know if I trust it, right? Because you don't, but you gotta give him a chance. You got to give him a chance, and the market's giving Jerome Powell a chance, and Jerome Powell's, he's been to his word so far.
last one is Bitcoin. We always look at it, and Bitcoin's been under some pressure this year, like we've talked about each and every week. Finally, some bottoming action, and the best you could say for Bitcoin is little tiny green candles at the bottom, but nothing really too bullish here, Matt. Still under the moving averages, still under some pressure, and that's not a great pattern for bulls. Do you think that it's going to test 6,000 before we can even really establish a triple bottom and a new pattern here?
It's so difficult to assess where Bitcoin is going to go from here, technically, fundamentally, economically. It's really, and this is kind of amazing, but I'm going to say this. For something that moves on average right about $500 a day, representing about 6-7% price movement, Bitcoin's pretty boring lately.
Mm,
I
yeah.
mean, it's even in the news cycle, it's kind of boring. It hasn't been this boring since before people started talking about it in 2017. So in looking at this from a pure technical formation, though, there's no real support level right here that it's forming. There's no historical support levels. There's no fundamental reason. It's just as this is going down so hard, it's more just taking a break. That's all I kind of see this. I
Yeah.
don't see I don't see this as a U shape going right back up. Now, With that said, obviously anything can happen. That's our disclaimer we put on anything. But from a technical perspective, this to me looks like it might want to retrace back up to 8,000 maybe. It's currently 7,490 before it ultimately does come down and test the lows. And I do expect Bitcoin to test those lows of 6,000, between 6,000 and 6,500. I expect that to be tested sometime in the near future.
And one stock I want to look at, Disney, bring this one up. Read a report over the weekend that their most recent Star Wars movie might be the first Star Wars movie to lose money. Matt, have you seen Solo?
I haven't seen Solo, but I did have a student from my event with Legacy Education in Dallas this weekend that highly recommended it. But unfortunately, it did see like a 68% drop in the first weekend to the second weekend. Obviously less than anticipated. I think the question, and you and I are kind of geeks, we like Star Wars, but the question is Disney having some Star Wars fatigue? Are they having some consumer driven Star Wars fatigue? They're pumping out a lot of products. That might be the case, or it might be a one-off. We'll see.
They'll probably eventually make money on it. The funny thing is when you finally see numbers after years
Especially
of how
international numbers
were distributed and whatnot, Disney's got a juggernaut there. The stock is down at support. Interesting candlestick there. Yeah, Disney, they're a huge company, obviously, and their earnings report was fairly strong from a revenue and numbers perspective. Just kind of an interesting Star Wars. I have Star Wars fatigue, and I love Star Wars, so I'll just say that. I haven't seen Solo, and maybe that's an indicator of where they are.
Apparently other people might be having it too, since the trend has been going down.
All right, guys, that is our market Skyline for this week. We'll be right back after this break.